Good morning, ladies and gentlemen, and welcome to the show on this Tuesday, the 11th of January, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, let's open up the charts right here and take a look at this article. It says, Canada-U.S. officials to meet in bid to resolve Prince Edward Island potato dispute. Well, you know what a lot of you guys don't know? Prince Edward Island here in Canada is red clay. The island's got this beautiful red loamy clay everywhere, and it's a wonderful place to grow potatoes, and they grow a tremendous amount of potatoes in Prince Edward Island. Now you guys are saying, well, what's the big deal about this? A lot of people looking at this would not really think about it that much, this resolving of a PEI potato dispute. See, what happened was, it says Canada suspended Prince Edward Island potato exports to the United States last fall after a fungus was detected in 2 different fields of these potatoes. They produce a massive amount of potatoes. Well, in normal years, this wouldn't be a problem because, there's all kinds of food, tremendous amounts of food. But you know what? China has come along now, and they've taken half of the world's grain supply, and they've put it away for themselves. What do they know that we don't know? And the next thing I want to talk about here about this has suddenly become a big deal. Now, normally this wouldn't be a big deal. PEI's potato harvest, compared to the American food supply, would normally not be a big deal. Suddenly, this is a big deal so that they are getting right down to nitty-gritty in business, and they're going to meet in a bid to resolve this. It's a big deal suddenly. Why? Why is it such a big deal? Well, I'll tell you why it's such a big deal. I think that behind the scenes out there, food supplies around the world are getting tight. They're getting squeezed. Not just potatoes. We're talking about wheat, corn, soybeans, everything out there, is like, it's not like it used to be. This is a sign in my mind, that things are not like they used to be. Food production's not like it used to be. We used to be plenty. And this is why prices are going up in the grocery store so massively. We've had tremendous amount of weather events and weather phenomenon. I'm going to tell you guys what. Here in Nova Scotia, right? I lived here for many years. I've lived here in Nova Scotia. And I remember back before the year 2000, every winter we would have a couple, maybe 2, cold snaps, what we call cold snaps, right? And this was between the year 1990 and 2000 when I lived here. And I used to very carefully pay attention to these cold snaps. And typically, the temperature would bottom out between minus 30 degrees Celsius and minus 40 degrees Celsius. Now, the Fahrenheit and Celsius scale, they converge at a certain temperature. They converge, the Fahrenheit. And so, it was well sub-zero, generally around 10 degrees below 0 Fahrenheit. And that's what we would go down to. Year after year, it was that way, all through the 1990s and up to the year 2000. And maybe even up to about 2010, I noticed that was our bottom temperature every year. Well, we just had a massive cold snap just now. Probably the worst one that's going to be this winter. And I've noticed this for the last few years. The temperature out there right now is going to peak at around minus 4 or minus 6 Fahrenheit. That's several degrees warmer than our cold snaps used to be back in the 1990s. Several degrees warmer now, our cold snaps. The coldest cold snaps are several degrees warmer. Maybe 5 or 6 degrees Fahrenheit warmer. I've noticed this. And this is a very, very good indicator that this location on the globe, the average winter temperatures have been warming up over the last number of years here. And this is affecting weather patterns, and weather patterns are going hooey, and because they're going hooey, I mean crazy, they're going crazy, weather patterns. It's affecting food production tremendously. But at the same time, the world has this virus going around that's also affecting food production. And so we're getting a squeeze from two different angles here. Weather and impacts of the virus on food production. Plus, countries are starting to see this problem, like China is seeing this problem ahead of time, and they're saying, hey, we're going to put away a bunch of grain for ourselves. Other countries are going to follow suit. And, you know, countries used to do an awful lot of food exports. Well, suddenly things can change and countries can say, hey, we're not exporting this anymore. We need it for our own population. And suddenly food becomes important. And that's what I'm seeing here. I'm seeing an extension of that, where food's becoming important. The PEI potato thing, you know, they're not just letting it go. They're going to get the officials right in there and meet to try to resolve it so the United States can get PEI's potatoes so that they can make French fries. This has become important. Why? Because food's starting to, around the world, food is just on the front edge of it right now. It's starting to get a little bit scarcer. But it could get a whole lot worse. Okay? Let's move on and take a look at silver today. Now, here's what I wanted to talk about. I want to talk about something different now. We are right now, we've passed through the Fed's first cut. And I told you guys, over the last few weeks, I said they'll get away with the first cut. Well, they've priced in the first cut now. Everything was affected by it. We've seen the prices on everything, almost everything affected by it. Especially the markets. Bitcoin took a big hit from it. The markets are into the volatility now. It's like no more smooth sailing anymore. Now we're in choppy seas in the markets. The volatility's here. But things are going to, I said they'd get away with the first one, and they've got away with the first one. Had a little bit of volatility, but they've pretty much got away with it. Now, as we progress toward this second one, we got about less than 30 days left. I also told you guys they're not going to get away with the second cut. The second cut's going to be the one where we start to enter into massive volatility. A lot worse. Things are going to get a lot choppier coming up. On the next one, in less than 30 days. Now, this is the most interesting thing watching, for me, watching the Fed, watching the bond yields, especially the 10-year, and watching what's happening right now with all of this. It's extremely interesting. And the reason why it's interesting is, and one of the reasons why it's so interesting is, watching to see when the Fed's going to yield and how far they're willing to let this go. How far they're willing. And, you know, I'm going to tell you guys something about the Fed and all those guys that are really at the helm, you know, operating this thing. They seem to think that we have an extreme, this is their mindset right now, that we have an extremely strong economy with low employment and all this kind of stuff, right? The thing is they've changed all their charts when they chart these things and the metrics that they use to help them to determine unemployment and so on. I mean, how many people are out there and they're not working or anything, and they're not on the unemployment rolls or anything else that are. They think we have a super strong economy right now, and they can get away with this tightening schedule, going by their own metrics and charts. But they've changed their metrics and charts. But at this point, they're starting to believe in their own metrics and charts, and they can't see the weakness out there anymore. Okay, because they've changed the way the statistics of the way they compile the numbers. They've changed it, but they've had that around a little while now. They've made these changes, and now they're starting to go with their own charts, which are skewed. John Williams over at Shadow Stats, he keeps them more accurate because he uses the old metrics and the old measures of the way they used to compile these charts. Especially when it comes to unemployment and labor force participation. Labor force participation, what is it now? You know? Anyway, let's get right in there and take a look at this silver price right now. It's up 7 cents on the day so far at 22.52. It's doing good, actually. It's maintaining its price. It's not quite. It's a little bit more stable and less volatility in the gold and silver market than I expected. I expected it to be a bit worse than this. But let's get in there now and take a look at gold today. Gold is at 1806, up $4.70 on the day so far. Maintaining the price above 1800 is really good. Let's take a look now at crypto. Now, crypto's 1959. And you know, we were running up around 2200. Now it's 1959. Now that's in billions, so we're talking trillions here. 1959 billion, so that's 1.9 trillion. And let me refresh the page to see which way it's going. 1953, and so it's going down a little bit. Let's take a look at the price of Bitcoin today at 41,567 right now. Now let's take a look at the Dow Jones today. And I'm going to refresh the page again. And we're down 216 points on the day at 35,852. Now, I think these markets are going to level out a little bit now. Now that the first impact is hit of the first cut that the Fed's made. We got less than 30 days before they do it again. And they've only priced in the first. Now, I know some of these commentators out there saying, okay, they've priced the whole thing in, all the Fed rate hike, all the Fed rate cuts, and all of the everything that the Fed's going to do. They've priced it in already? No, they haven't. They're still taking a wait-and-see attitude, a wait-and-see approach on this. And they've priced in the first one, the first cut of $30 billion in the Fed's taper. They've priced that in now. And they're down today. There's still a little bit of volatility out there, but I'm expecting it to smooth out a little bit until the second cut. And I've told you guys the importance of this second cut. I said they're going to get away with the first one, but I don't think they're going to get away with the second cut. Because the markets out there, when they make that second cut, they're going to say to themselves, hey, you know, this really is real. The Fed really is going to stick by their plan. And yes, of course they are. Because they're reading their own metrics, which shows a much stronger economy than the real underlying economy. And they believe in their own metrics. And so they think that the economy's booming right now and that there's very low unemployment, you know, and we're great. We're off to the races, and the economy can withstand all of this. But it's all amounting to credit. The whole economy's where it is because of credit. So you haven't really got a strong economy. What you've got is an economy built on credit. And now they're saying, hey, you know what? We're going to pull this credit away. We're going to pull the rug out from underneath this thing. But somehow they can't see it. They think the economy will stay stable and even start to grow with the absence of... And you got all these guys out there right now who are saying, yeah, this is the Fed's doing the right thing. They're a little bit late, but they got to keep going with this, and we're behind the curve on raising interest rates. We got to raise them faster. It's crazy. You got an economy that's built on credit, and you think you can pull that away? You think you can pull a punch bowl away? I'm sorry. You're going to find out very soon. You're going to find out you can't pull a punch bowl away. You can't stop cheap, easy credit, because this whole economy is based on credit. And I'm going to tell you what, the people out there, you know how they've been using their credit cards lately to try to survive? Credit card debt's just taken a big move upwards. I'll tell you what, and those guys are nothing more than legalized loan sharks. That's basically what they are. Anyway, enough said on that. 35,855. It's down 213 points on the day. Just wait until that next cut, guys. Then we're going to see the real volatility. I mean, you got your little ship in the harbor right now, and you're seeing some choppy waves, but she's still in the harbor. Wait until you go out into the real ocean. That's next month. We're going to see some big waves of volatility then. Yeah. Okay, crude oil today, $75.59. It's up $1.34, so it's just ready to crest 80 bucks. Right ready. Okay, bonds and rates now. Now, here what we're seeing it yesterday. Remember I said they've priced it in now. Okay? So we had a U.S. 10-year that was approaching 1.8. And now it's at 1.77. So it's backed off just a little bit. Expect this thing to not to go back down to 1.4 like it was in the 10-year. We had 1.4 before they started all this stuff. Don't expect to see that 1.4 anymore. Expect to see it maybe hovering somewhere between 1.6 and 1.8. More toward 1.6. Probably it might descend back down. It's at 1.77. It might descend back down a little bit into around the 1.7 range or 1.65, something like that, for the next 30 days till the next cut. Then they'll price in that next cut. I'm expecting it to go up to 2% on a 10-year when they price in the next cut. So here we go, boys. A 10-year at 1.77, and we're looking at a 30-year at 2.08 today. And so the long end is dropping just a very insignificant little amount. We got the short end going up, and we've got the biggest movement here. It looks like the US 3-year at 1.22. It looks like it's went up almost 3 basis points today. Let's take a look now at the US dollar index. And the dollar's standing at 95.84, and it's going along sideways today. Thank you guys for listening to my show. Like and subscribe, you know, and all that good stuff. I appreciate you guys out there. You guys, my audience. And you guys come back because you know that I'm right quite a few times on my show, and I look ahead into the future. What's going to happen? The type of economics that I practice here is more of, instead of just being down close, it's kind of like a painting, okay? Say you go to a museum to look at a painting, and you know, a lot of people stand up really close to a painting to look at the artwork, you know. But then there's some people that stand back further away and they say, hey, you know, they can see a little bit more of what the painting reveals from standing back. And that's what a macroeconomist does, is they stand back and they take a look at the overall viewpoint of the economy, rather than being right down close in one particular market, like maybe into the stocks or bonds or whatever. You know, some people are right in close and they understand that market with more complexity than the macroeconomist. I'm a macroeconomist. I don't just stand back from the painting. I stand like a mile away, you know, and so I'm looking at it from a much more long term and trends within the economic field, you know, of these trends that develop over long term. And so that's what I've been doing on my channel for the last number of years, going back like 6-7 years, you know, is this long-term trends. And if you've been guys that have watched my channel for a long time, you'll realize that how many calls I've made and how many calls have been coming true, you know, over the years. And this event that we're in right now, we've entered into, I've forecast it for a number of years now. I call it a deflationary spike event. This is the trigger for the massive inflation. And I've been calling for this event for a number of years, and it's not going to be I call it a spike event because it's going to be so fast. It's going to be like a spike downwards, and then the whole thing's going to be over. It's not going to last long. We're in it right now. On the other side of this is the massive inflation. And that's the move that's going to make gold and silver really go up, and cryptos too. And you know, if Bitcoin survives, you guys have no idea how huge it's going to be. If Bitcoin survives, if it survives, how huge it's going to be. I'm not talking about all the other cryptocurrencies, I'm talking about Bitcoin. And also, you guys have no idea how massive silver's going to be, and copper. Not so much gold. Now, I'm not saying that gold is bad or anything, but gold's a different animal than copper. They use not copper, I mean silver. Gold's a different animal than silver. They use silver in industry. They keep consuming it to try to make electronics and everything else. And a lot of it ends up in the landfill. But as they mine through the earth, see, we went through a period in time when they had to mine with pick and shovels and use a horse to pull the mine cart up out of the mine. This is what it was for thousands of years. This is how they mined. Then we had the Industrial Revolution. And first we had steam shovels that ran off a steam engine. You know, and they were able to move massive amounts of earth. Then we came along with these big diesel and hydraulic machines. They're able to even move more earth. When I say earth, I'm talking about ore in the mines. That's where the silver comes from. It comes from ore. Able to move tremendous amounts. So they were able to go in basically and mine all the good stuff out of the ground really fast. And so mining production went up massively. And yields from the mines went up massively. I'm talking about silver here. They've basically scoured the earth. And now what's happening is ore grades are starting to drop in the mines. And it's no wonder, because the miners always go in and tap out the best ore that they can get that's going to yield them the most silver out of the rocks. But they've mined all that already. They've picked all the easy fruit. And now they're down to having to mine ore that doesn't yield as much, and energy prices are going up. And demand is going up tremendously. So this is going to all come down on silver, and looking into the future from a macroeconomic picture. What we're looking at is just like the United States Geological Survey did a study on silver, and they said that it's going to be the first element on the periodic scale to go extinct. Well, they didn't mean really extinct, but what they mean is unobtainium, basically. But they need it for electronics. Now, these big electronics companies, they'll just pass the price on to the consumer when the price of silver goes massively high. They'll still have to have it. And so what you're looking at in the future is a commodity, silver, that has been a monetary metal in the past, that is going to go exceedingly high in value. It's just a question of when. But we're not talking a long distance in the future. We're talking 5 or 10 years. If you're willing to buy physical silver and hold it for a few years, not thinking in terms of I'm going to make some quick money on this, but I'm going to hold this as an inheritance from my family or whatever for, say, 10 years. I'm going to hold it for 10. Boy, you are going to be handsomely rewarded over that period because of the logistics involved for getting silver and how they need it for all these things like solar panels and this whole new thing coming in where they're going to try to convert the entire world over to do green this, green that. They're going to need silver, massive amounts of it. But that's not available. And, you know, an awful lot of people have been hoarding it, and there's a lot of silver in the world, but they're not going to let go of it, especially when the price really starts to go up. They're going to want more, especially the rich people out there. There's going to come a point where it's going to be very difficult for the average person to buy it. And, in fact, I see a point coming where the governments ultimately, in the end, are going to say, hey, you know what? The average Joe cannot buy silver. We're not going to supply they're just not going to supply a a coin and bar market. It's just not going to be there anymore. They'll still be buying. You got it. They'll want it. But I can see maybe 5 or 10 years down the road where the local coin store doesn't have silver because the governments have restricted the sales because they need it for their factory productions and stuff. And the price by that time, I mean, they'll want to buy it off you if you got some, because the world's going to be greedy for silver. Absolutely unbelievably greedy for it. So that's silver. Now, Bitcoin is the number one of these cryptocurrencies. And slowly but surely, they are making it scale. What does that mean? Making it scale? It means that they can actually use it for... See, up until now, it's only like 7 transactions per second on the Bitcoin network. But as they make it scale, they'll be able to... The capability will be able to go up into probably, in the end, thousands of transactions per second. And that's what scalability means, that people can use it to transfer funds from one place to another very quickly, like digital gold. What's the worth of something like that in the financial system? As a store of value? Astronomical. And so an astronomical amount of money in the end might be actually parked in Bitcoin. Not really using it so much for daily transactions, but using it to store the big money. And that's what could happen with Bitcoin as a parking place for huge money. And so it's already somewhat. It wants to take that role. And think about it. Now they store gold. But say Switzerland wants to move their gold to some other country, or some other country, say the United States, wants to move some gold around here or there. There's logistical problems. It's heavy. You got to try to fly it, whatever, and everything. Bitcoin, it's a substitution. Bitcoin can be moved so easy. Anyway, I'm rambling on. Thank you guys for listening to the show. I'm going to catch you guys in the very next episode. Bye-bye.